Hello, traders of the world. Dadas here, speaking to you from the Dadas trading room Discord server, where I stream live all my trades. So you can watch me from basically, well, usually 10 a.m. Central European time, all the way to 2300 hours Central European time. So basically until this hour right now. And I also do my daily recaps in Polish and in English at the end of the day, and I will be doing that. I will continue and do that, and as long as I can. Okay, so first of all, as we can see, the DAX 30 market today. After yesterday's drop, it went sideways, right? It went sideways, and then after the opening of the Frankfurt session and the London session, what we saw here was a range, right? So basically, it was a range like this. So it was a range of about 126 pips, I think, something around that. Yeah, something around 126 pips. It was so basically, looking at the average daily range, it was very suspiciously low. Of course, today there was, today or yesterday, whatever. It's still today here. So there was a French bank holiday. Now people say, what does a French bank holiday have to do with the volatility of the DAX index? Well, obviously it has something to do, and I've noticed that such things very often happen when there's an Italian bank holiday, there's a major German bank holiday, also then there's a major French-German holiday. Yes, those holidays do have some influence on the amount of trading being done during the specific day. What happened later? Basically, the measurement for today was very simple. It was like this, and basically the market did the whole thing as it was supposed to do. Now, today I had some, let's say, leftovers of my bad habits, and basically I did make a few mistakes. First of all, I shouldn't have been trading long at this moment and not exiting at this moment, right? Because if I had entered long at this moment, I should have exited that trade at the resistance level, right? And I should have taken somewhere around whatever was available there, like 17 pips. However, I waited it out, and then I got afraid at this moment because the price started moving quickly down, and I exited this trade and turned around at 2 lots, and the price all of a sudden started moving up, right? Now, the right way to go was either to leave this long and keep the stop loss where it was, right? It was down there, and that's where it was supposed to stay, and I should have just waited without doing anything, right? Unfortunately, I still did this stupid thing, and then when the market was already trying to go up again, I entered long again. Now, so this trade was still not done very properly because the market basically didn't leave this resistance zone yet, but the trade continued on, and it was very nicely profiting. It was profiting even as much as 75 pips, at which level, of course, this loss would have been recovered. But I decided to wait all the way until it reaches up there, yeah, somewhere, yeah, because that's where my take profit was, and I trailed my stop loss to some profit, all right, 25 pips, and basically the price moved back down. I was thinking of closing this at around 50 pips, but then I had a conversation with somebody, and then yeah, so I left it and it got taken out. But then I re-entered this because I saw the situation. I said, okay, this is a good moment actually to enter the long trade, because that's basically what the whole thing is about. We have a breakout, we have a retrace, right, or pullback or a retest, and the price is then moving back up. And I closed the trade at about 31 pips. So altogether I made about 55, 56, maybe almost 57 pips, right? So I did recover some of this loss, even though not all of it. But the positive thing is that I already was doing something more. At least in the last trade, I did something that I should actually be doing, and the price then continued on, and you see that by the end of the day, it had actually reached my take profit. Now, you might wonder. Some of you know that I'm a full-time trader, and I've been trading for a long time. Quite a long time, almost 10 years now. So basically, what's the problem? Well, I figured it out, because the problem is like this. Just before this way of trading that I'm trying to get used to right now, I was actually trading on the Renko bars. So in other words, I was using the M15 charts and 5 charts as the analysis charts, right? And I was actually looking for very short moves on Renko charts, where my Renko blocks were the 2.5 pip, right? So 2.5 pips of DAX, and my expert advisor for the Renko charts, yeah, it was. I mean, my expert advisor for my Renko charts was set to had a set of 3 levels of trailing stop. The first trailing stop was triggered more or less after 2. It was triggered after the price went over 2 Renko bars. So basically, more or less after about 5 pips of movement, right? So a little bit more than 5 pips of movement. So that was my first trailing stop. The next trailing stop was around 9 pips movement. And the third trailing stop was after the price had crossed the virtual take profit level, whatever the take profit level was. And if still the trade held, the closing algorithm was when the first reverse Renko bar appeared on the chart. So basically, most of the times I was taking short trades at, not short in direction, but short in time. In other words, those were usually trades of around 5 pips, sometimes a little bit more, depending on the slippage, sometimes a little bit less. Sometimes 9 pips, 10 pips. Less common were the ones that got taken out on the virtual take profit, and even less common were the ones that overshot the virtual take profit and were closed on the first reverse bar. But anyways, they happened from time to time. So So I was basically doing it in a different way, right? Trading in a different way. Now, for some time, I've been trying to switch myself over to being more of a intraday swing trader. So I'm trying to become a trader who can take 50, even 100 pips, right, in one move, and I'm still not getting used to that. I mean, I think I'm getting better at it, but it really takes some effort to switch the context and to become more patient, right? Because in order to get 50 or 100 pips, even on such an instrument like DAX, like the DAX 30, it still usually takes some time, right? And it's not that very often it happens that you can make 100 pips in 15 minutes. Sometimes you need to wait hours for that, right? So basically, as you see here, the most proper trade would have to be entering somewhere right here on the M5, for example. Yeah. So basically like this, yeah. And then entering somewhere right there, and then taking the trade over all the way up to this level, which would take 15, 30, 45, 1 hour, 1, 2, 3, 4, 2 hours, and 15 minutes. So yeah, and basically it requires ignoring all these counter movements, right? Which we never know if they will happen or not. So you see, there's a pretty big practical difference between trading the way I used to trade, where I was waiting for a pretty long time for the right opportunity, and then taking a very quick trade, usually very quick trade on the Renko bars. And that is the basic difference, and that is basically why I'm having these difficult times when I'm forced or I want to do it, right? I want to hold the trade for a longer time and become more like a swing trader than a scalper. So I think this summarizes the best the situation that is happening. Well, I see some light in the tunnel, so basically I have to continue doing what I'm doing, continue my measurements, because basically you see that basically we can see that it's working. I mean, look, yesterday just one click, right? Just one click and everything worked without the necessity of adjusting anything. Today again, one click and everything worked without adjusting anything. Of course, I was adjusting. I was doing this at a specific moment, like trying to find this level or to find that level over here, right? And anyways, even this would have worked, right? Because this would have worked up to this point, right? So anyways, there was no reason to go long anywhere except for when the price broke this resistance level and respected it as support. So anyway, we look at it. It still takes sometimes it takes a long time to wait out for the proper situation, right? And not to take trades. Just wait out and not take trades, even though potentially there is 126 pips to be taken somewhere in this area. So basically in this area there are pips to be made, right? But obviously when the price is in consolidation, we often have this tendency to enter exactly like I'm entering right here. And now, considering there would have been a trend, a strong trend, this entry would have worked perfectly because the price would have just continued going up. I mean, maybe not necessarily directly in one candle, but if there had been a trend, a strong trend right here, the price would have, even after this little retrace, it would have continued up. It wouldn't have gone down so much, but after this retrace, it would have gone up, and then maybe did something else, but it generally would have been going up. Also, if there was a trend, also this a short entry would have been going down, but the price was inside a consolidation. And then when the price is inside a consolidation, this type of entering that I am used to be doing is simply doesn't work in consolidations, right? So on Renko charts, it would have worked most of the times because even with this entry on Renko chart, there was over 5 pips that the price made, right? So basically, the price would have gone down at least 5 pips for my my trading stop to be triggered, and I would have been profitable, right? Even on such a small distance, because that would have been a scalp, right? Also, on this long, I would have been profitable because there was even 20 pips. So basically, any movement here, any movement of over 5 pips would have triggered my trading stop mechanism on my Renko charts, and I would have been profitable, right? So basically, trading the Renko charts, I wouldn't have any stop losses right here. I would have all my trades profitable, but only at a small or usually at a small distance, right? At a very small distance, and pretty quick trades, thus very quick trades. Now, doing this on the M15 or M5 charts all of a sudden changes the context pretty much. And like I say, when there is a strong trend, everything works. When there isn't a strong trend, well, such things happen like this. Now, how to solve this problem? Well, you gotta find the support and resistance levels, and you have to simply not trade when the price has not broken the appropriate support or resistance level and didn't become the opposite, right? So resistance must become support must become resistance. So basically, I never had a real reason to go short, because I had a support zone which didn't become resistance, and here I had a resistance zone which didn't become support yet. So there was no real trend right there. So okay, so you could say, could we have done something like this? For example, just measured out this just measure out this whole consolidation Yeah, see that it was about 126 pips, right? And could we have traded that on the M1 chart, for example? Yes, most probably we could have done that, and we could have traded these zones right here on the M1 chart, right? But I wasn't doing that. I wasn't thinking in that way, right? I wasn't thinking in that way. I wasn't looking for these types of trades, right? Because these could have been small trades, like between one zone or between two zones, or maybe I don't know, these lines right there, right? And now we could think about it in still a different way. Like I said, by using Renko charts, right? By using Renko charts with a reader, because you see, a Renko chart would have a very small, would have 2.5 pips. So 2.5 pips would have been 250. So a Renko chart would have basically such small blocks. You see, such small blocks. So so then these zones would have been. Let me generate that for you. Okay, let me open up another DAX 30 chart. Let me apply the Renko bars here. Yeah, let me apply the Renko bars here. Let's fix this to 250 points, which means 2.5 pips. And let's name this something like, I usually do that as M61, whatever. Okay, and let's generate this chart, right? Let's open up this chart, yeah, and now let's apply the appropriate template. I have a template for that right here. That would have been this one. And this template also has the reader right here. I don't know if this reader is going to work properly right now, because I don't remember here. Okay, but I have the wrong type of reader here, so I have to delete that, and I have to apply my my current reader, Dada's Market Communication Interface Reader. Here it is. Read true. Maybe I don't know if I have a set for that. This CBC2 ruler reader. This could be that one. Okay, let's apply that and see. And exactly. See, now we have these zones, right? So being when the price was inside. Whoops! Oh, my microphone. When the price was inside those zones, right? It's just an example here, because maybe we don't have so many Renko bars for history right here, but we have enough to see that this would have worked, because, for example, I could have done this, right, and waited for this retrace right here, and then entered long when the price was going up this way. So if I had entered long at this level, I would have been in this situation where there were no pullbacks. I would have been probably trailed to my virtual stop loss somewhere right there, and then it would have been taken out, right? Anyways, both there would have been a 5 pip trail right there, and there would have been a 9 pip trail as well. So the minimum I would get is that 9 pips on the pullback if the price hadn't reached the virtual trailing stop. But the virtual trailing stop is not exactly the same as this TP line. It's usually a bit lower, so basically there is a big probability that I would have taken this trade right there, right? So also I could have taken a trade somewhere like at this level, but I would have to. I need 3 candles. I need 3 bars right here, 3 Renko bars. So basically, I need those 3 Renko bars. There's a pullback. The price is suggesting going up, so I'm entering long. And again, there would have been a good trade right there. So basically, you see, this is a different, similar but a bit different way of trading the market. And perhaps that's I can see that's the most that's the biggest probability why I am making so many mistakes on when I'm trading the normal charts, so standard time frame charts, right? Okay, so I think this has been quite a long video for you. Thank you very much for today. Please like, please subscribe to my YouTube channel, hit the notification bell. Of course, all the links are below in the descriptions. I've also already prepared the benefits for my patrons on the Dada's Trading Room Discord server, so you can read about them over there. And the link to my Patreon is also down in the descriptions. Thanks a lot for today. I hope you keep safe and keep healthy, and see you tomorrow. Bye.